Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of September 30th through October 4th, where we'll strive to help you make money trading October of 2024. So again, thank you for joining us for part one of our weekly trading game plan for September 30th through October 4th. And let's talk about how to make money trading October of 2024. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for September 30th through October 4th. We keep our notes documents in a publicly accessible Google document. Our notes documents contain links to bonus videos, tools, and resources we use to do our market analysis, come up with our trading strategies, trade ideas for this trading week. We store all of our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as previous week's weekly trading game plans. And you can find a direct link to that publicly accessible Google Drive folder also in the description box below. Welcome, Gerald Fitz. Thank you for joining us in the chat today. Hope you had a great trading week and are doing well. Firstly, we'll look at how the markets ended up on Friday. In the main page of FinViz, we can see the Dow eked up a slight gain, 0.33%. NASDAQ slightly down, almost 0.4%. S&P pretty flat, just down 0.13%. It's a little bit interesting that the Dow I think it made a new all-time high, and we see these reversals at about 11 a.m. Looks like everything kind of turned down around 11 a.m. and trailed off through the end of the day. We ended up with 58% advancing, 38% declining, still had almost 92% new highs, only 8% new lows. We've got 73% above their 50-day moving average, only 27 below, and 70% above their 200-day moving average, about 30% below. So it shows a little bearish, but a lot of strength under the covers, a lot of stocks above their 50-day, above their 200-day moving averages, and we've seen the major indices pushing to new all-time highs repeatedly. Bit of a rotation out of the Mag 7 on late Friday, so we see NVIDIA retraced, the semiconductors retraced after they had a pretty good run after Micron's positive earnings. So Amazon down a bit, Tesla did rebound, Costco down a little bit after slightly good but slightly disappointing earnings. All the other sectors pretty mixed. Welcome to Crow, Balu Dog, the Ricky Khan. Thank you all for joining us. Hope you had a good week. So some of the news, China starts to reverse its uninvestable image. We'll talk quite a bit about China and the China stimulus and what that means, not only for China, but possibly other emerging markets. Yields dollar dip. Dow rises to record. Chinese index posts best week in years. So again, positive China stimulus. Wall Street binge extends to unloved assets after global policy easing. So again, other central banks around the globe are easing their interest rates as well. Dow jumps 100 to close at record. Major indices extend rally. Saw oil break back down below 70. Looks like it got down to 67s and then bounced back up into the 68. So resistance at 70 despite the further tensions in the Gulf area. Natural gas been trending up as we discussed last week again. Looks like it's trying to test that $3 resistance level. So again, we'll see that a nice upward trend in natural gas. Gold continues to be a beast, break new all-time highs. Looks like it's tested and got rejected off 2,700. We'll see if we get a consolidation around that resistance level at 2,700. But again, gold, silver, both been pretty beastie the past couple weeks. Right now, the futures on the index have the Dow up, S&P and NASDAQ down, Russell slightly up. Also, Treasury yields did retrace just slightly, still about 4.1 on the 30, 3.5 on the 5, 3.7 on the 10-year. So the yields had been bouncing up, prices down, but we did get a slight retracement on Friday. Bitcoin had run up, I think 60 in the 65s, possibly even higher, and retraced some again on Friday. So a little bit of a risk off late Friday, although we had pretty much risk on for the majority of the week. So if we look at the major indices and a breakdown of the technology components, again, just a reminder, you can access these screeners in our notes documents and also in the screener sheet of our ETFs and Watchlist Google Sheets. So we see again the Dow very strong, continues to make new all-time highs above that channel. Nice upward trending, so Dow's been very strong. Again, new all-time high. Russell not as strong, which again is a little bit surprising when we know we're going to get some further rate cuts. Don't know how many. Did break its August high, has not broken its pre-August high yet. So again, some potential more upside in the Russell. It is oscillating along that upper trend line above its moving averages. So again, some consolidation, oscillation in the Russell. Qs, again, not as strong. We've talked about that rotation kind of out of technology. It did break its August high, has not reached its July high. So again, potential further upside in the technology sector if we see a rotation back into technology. Again, overall, the market sentiment's pretty bullish. Again, S&P continues to make new all-time highs, nice upward trend at a support level in the low 500s. And again, nice upward trend, plenty of room above its short-term moving average. So again, pretty good strength in the S&P and the Dow, not quite so much in the NASDAQ and Russell right now. Welcome, Katon, a trader formerly known as Easy Mike. And we talk a lot about China, global markets. So if we look at a breakdown of the technology components, again, ARC did get a little bit of a pop up to its upper trend line. Looks like it's getting resistance, rejection from that, support from its long-term moving average, but not really going anywhere. Again, the FANGs have not really participate in the overall market exuberance. We talked about the reign of the Magnificent Seven possibly being over. We kind of see that in the FANGs being flat. Semiconductors, again, they got a pop on Micron's positive earnings. Looks like it rejected off that longer-term moving average. We talked about the recent death cross and the 50-day crossing the 200-day, which is generally bearish. So again, we're seeing some rejection, so potential downside on semiconductors. This lower trend line seems to be pretty good support. There might be an opportunity for shorter term swings in stock sell near that lower trend line. I was seriously looking at it in that area, and we saw a nice bounce there. Biotechs get generally down. Looks like it tries to break that upper trend line, gets rejected, back down below its near-term moving average. Resistance both from that and the trend line. Also, an interesting observation is it seems when the other technology sectors are down, biotech seems to be up and vice versa. So biotech seems to be trading opposite, contrary to the other technology sectors. So short-term traders, again, possibly an opportunity there using Lab U to trade biotech long, Lab D to trade biotech short. Again, contrary to the other technology sectors. TQs, again, just leveraged on the NASDAQ, so we see similar behavior. And broad technology, again, not very strong. Tried to break that August high, failed, got rejected, trending back down. Might even get a death cross on the broad technology sector in the near future. So again, Technology not very strong. So again, we continue to see that rotation out of technology into sectors broadening in the market, which is again positive for the overall averages. Okay, let me grab a quick drink and we'll look at the groups, the sectors, the industry breakdown. Welcome, Alan Krenz. Thank you for joining us. Hope you had a good trading week as well. I see you asking about the hurricane. Yeah, we're all fine. We're on the East Coast and it hit up in the panhandle off the Gulf. There was quite a bit of flooding, a lot of power outages. It hit as a 4, so pretty strong. But again, we just got wind and rain. So been through plenty of hurricanes over the years. So hopefully everybody up there is okay. And I believe there were a few deaths, which is very sad. And quite a bit of power outages, damage, etc. So, okay, so if we look at the groups, sectors first, from Friday, we see a rebound in energy, utilities, communication services, again, rotation out of technology, back out of basic materials. But for the week, basic materials were relatively strong, a little rebound in technology. Industrials continue to be strong. Utilities rebounded a bit. The weakest for the week was energy and healthcare. For the month, again, rebound in utilities, basic materials, industrials, negative for healthcare energy. Again, we see this reoccurring theme. The energy's been the laggard. Technology, somewhat positive. Again, just a reminder, this week we've also got the end of the month, end of September, which is also end of the third quarter. So you may see some rotations from laggards to leaders. And we'll talk about that energy is also a positive sector for the month of October, going into the fall, etc. So my humble opinion, we may see some rotation back into energy, maybe a bounce back in oil prices, etc. Continue trending up in natural gas. Again, utilities and real estate, very positive for the quarter. Real estate, not somewhat positive for the month. Again, we saw yields kind of bounce up, then bounce back down a little bit. So again, real estate likes lower interest rates, lower bond yields, lower mortgage rates, etc. Look at the industry breakdown. Again, we did see a slight rebound in oil, natural gas, coal, etc. on Friday. Solar, utilities, some of the REITs. Some of the REITs were negative. Copper pulled back a little bit. Gold and silver pulled back a little bit. Again, they've been very strong. Again, uranium's been very strong. We've been talking about that for several weeks, talking about uranium stocks, aluminum, copper, so basic materials, solar, steel, agricultural. Some REITs negative for the week. So again, bond yields generally have been up for the week. Biotech pretty negative for the week. For the month, again, uranium strong, utilities, basic materials, silver, gold, coal, steel, REITs, gold, negative oil. And for the quarter, and again, this is another area, we're going into fourth quarter, so we might see rotations from laggards to leaders. So and leaders profit taking in the leaders. So these sectors that have been strong might see some profit taking, gold, silver, etc. Utilities, and we might see some rotation into some of the laggards. So we see what was strong. Real estate's been strong, utilities, etc. Weakest sectors for the quarter, again, energy, oil. Uranium was actually negative, but we already saw that rebounded quite a bit, trending upwards. Coal and oil. So I think that's energy possibly. So rotation, semiconductors were negative. Talked about potential bounces in semiconductors, but trending downward in general. Okay, next we'll talk about some of the economic data from last week, look at the economic data upcoming for the upcoming week. Just a quick reminder, as soon as the important economic data comes out, or any important economic news, try to capture that, post it in our Surf the Markets channel in our Discord. Our Discord's free to join. Find an invite in the description box below. And you can see as the economic data comes out, I try to capture screenshots from investing.com, raw data, etc. Post that in the Surf the Markets channel in our Discord. Again, important economic data, economic news, etc. So again, we'd love to have you join our Discord, actively participate in the discussions related to trading, and also a great source for getting real-time economic data, economic news. So just some quick highlights from the economic data from last week, and then we'll jump over to investing.com and look at the whole calendar. So not a whole lot Monday, Tuesday, Wednesday. Well, we've got Fed speakers talking about what they think about the future rate cuts, the rate, etc., and that will continue. But Thursday we've got some PCE, core durable goods, and jobless claims data, GDP data. So continuing claims went up a little bit, but again, not a significant amount. Core PC prices in line. This was interesting. Corporate profits were up, so that's positive for the markets. GDP pretty much in line. Sales are down a little bit from expectations. Again, all positive, so again, no fear of recession. Initial claims below expectations, so again, we're not seeing an erosion in the job market. 4-week averages down, so again, no issues with higher unemployment showing up. So that means the Fed really doesn't have to do any very rapid cuts, rapid rate cuts. Spending down a little bit, but not significant, below expectations. Friday, we got core PCE. So again, this is one of the Fed's main measures for inflation. And we see pretty much in line. Month on month for August, actually below expectations, year on year as expected. So the price index down from expectations a little bit. Personal income, though, was less than expected, spending less than expected. So the consumer is slowing down. But again, it's still positive. So the consumer is still spending, it's just slowing. We also got Michigan sentiment. So the 1-year inflation expectations, as expected, didn't change, still 2.7, below 3%. 5-year didn't change, still above 3%. So it's, I'm sure the Fed would like to see that come down a little bit. Overall sentiment, though, did improve a little bit. So expectations up a little bit, sentiment up a little bit, and current conditions up just a little bit. So again, the consumer's feeling just a little bit better. Not a lot of changes in their expectations for inflation. So again, when Powell said inflation seemed to be well anchored, that seems to be supported by the Michigan Sentiment Survey. So let me grab a quick drink and we'll go through the whole list of economic data from last week, look at the data for next week. Welcome, Fairchild. Thank you for joining us. Hope you had a great trading week and are doing well. So again, the rest of the calendar from last week. Again, we got Fed officials talking, global manufacturing down a little bit, bond auctions, yields down. That's positive for bond prices. And more Fed officials talking, house prices down a little bit. Crude oil stocks down, but again, we saw the price of oil fall. Mortgage rates down slightly. Applications still positive, but down a little bit. Building permits a little weaker than expected. Home sales up a little bit, but down from previous. Crude oil inventories came down. Talked about jobless claims, the core PCE, GDP, initial claims. I had a Powell talk. He didn't even talk about monetary policy going forward. Pending home sales, below expectations. Natural gas storage up, but less than expected. We can see natural gas prices up. Bond yields pretty much as expected. And we talked about core PCE and Michigan sentiment. This was a little interesting. The Baker Hughes dropped, four rigs, oil rigs. Total rig dropped only one. So again, diminishing supply, trying to probably hold the price up a little bit, but we did see the price break down below 70. So it looks like the producers are trying to reduce rig count. I don't know how much of that could have been hurricane related as well. I don't know how many of the rigs shut down for the potential hurricane. We don't have a lot of them right in the Florida Gulf area, more Louisiana, Texas. So when hurricanes are headed that way, that can impact supply. Welcome, Walter Lyons. Glad to see you. Hope you had a great trading week. So if we look at the calendar for next week, again, more Fed officials talking. So again, they'll be listening for, what's the probability that next rate cut will be 50 versus 25. Probabilities will oscillate around their discussions, etc. Also, all this data. It's some manufacturing data. See if the economy's slowing. JOLTS job openings. That will be a source of interest, potential source of volatility. On Tuesday, again, Powell liked seeing that tighten up a little bit. And more Fed officials, mortgage rates, ADP non-farm change. So again, is the job market weakening at all? Get several data points this week that'll indicate that. Calendar job cuts, then typical initial claims, continuing claims on Thursday. So again, a lot of speculation, on the Fed rate cuts going forward based on these data points. So again, probabilities will oscillate based on what the Fed officials are saying, if each of these data points is coming in as expected or not. And Friday, we get non-farm payroll. So again, a lot of focus on the employment market this week. And if anything shows some significant deterioration, in my humble opinion, that will increase the probability of people thinking that the Fed will go another 50. People are already thinking the Fed's going to continue with 50-point rate cuts going forward. We'll see if this supports the need for a further 50 or not. And just a reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and hopefully some entertainment purposes only. Also, you can see the earnings calendar for next week in investing.com. So we've got some Carnival, we've got some travel. So I believe we're going to just start kicking off the next earnings calendar coming up. Got Nike, so retail, And that'll be interesting. See if that's further deterioration, see if the China stimulus, if they forecast any positive impact from the China stimulus, Levi's, so a lot of retailers. So it looks like, we're just winding down one season, kicking off into the next one. There's AEHR, it's an AI related data center company that a lot of people have been watching. So it'd be interesting what they say relative to the AI data center build out, etc. So that might have an impact on some other data center related companies, etc. So again, you can hear how we tend to play earnings, how to make money trading when earnings matter. Again, as you saw with Micron, etc., Costco, it's not just their earnings. Costco reported pretty good earnings, but their growth was slowing, guidance slowing, and they showed that the consumer is buying a little bit less, so slowing consumer, and that was turned out to be a negative. So again, you have to listen to their guidance, their earnings calls, etc., to determine whether that's positive or negative going forward. Other reminders: the U.S. elections are November 5th, and the next FOMC meeting is until the 6th, 7th, so it's right after the elections. So they don't have to worry about appearing political, although they certainly didn't in September. So it'll be right after the election. So both of these, increase volatility going forward, and we'll look at that as well. Okay, let me grab a drink and we'll look at the market screen and Webull as well. Just a quick reminder, if you're not already using Webull, we're still offering 75 free fractional shares of stock. They're also offering now at 6.25, so it was 7%, still a bonus 2% for 30 days interest on your uninvested cash. Again, these rates are going to go down. As the Fed cut interest rates, I've already seen the money market rates have dropped from about 5% to headed towards about 4.5%. And we can talk about some of the impacts of having higher interest on cash and what that means for equity investment, treasury investment, etc. But again, you can still get 6.25, which is pretty good. It's 75 free fractional shares if you deposit 25K or more. Under 25K, you get 20 free fractional shares, still get that bonus 6.25. So again, those rates are going to go down, so take advantage if you're not already using Webull. And we use Webull for our market analysis, our due diligence, the majority of our trading. And if you use our affiliate link in the description box below, you can get all their current promotions and help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen and the online browser version of Webull. So we'll go over our typical things, and then I want to show you a couple other features that we've discussed in the past. So we see advancers, decliners, pretty balanced, slightly more advancers than decliners, 3,700 advancers, 25 decliners. The majority of advancers very small, balanced by the majority of the decliners. So, and kind of long tails, so pretty balanced tug of war there. Thought the inflow was quite interesting. It's atypical. We saw positive in the NASDAQ early in the day, then about noon it went negative. increasingly negative until pretty much the close, bounced up a little bit. We also saw the NYSE turn negative pretty quickly. And typically on Fridays, there's an positive inflow in the NYSE that we've seen for quite some time. And this all went negative, kind of flattened out. But again, it's been a long time since we saw negative inflow in the NYSE. Possibly that might mean, that the Dow is at a top. Some of the other sectors, industrials, etc., may be profit taking there, might be at a top. Also wanted to quickly again look at the U.S. Treasuries that we can see in the market screen in Webull. We looked at this last week. I think it's going to be increasingly important. The Treasury yield curve, impact on, again, interest rates and cash, mortgage rates, etc. So we can see the 1 year went up a little bit to 3.9, 2 year down a little bit to 3.6 about. So we still got a 1 to 2 year inversion. And then the 10 year went up a little bit to 3.75. So again, still inverted from the 1s to 10s, but no longer the 2 to 10s. So again, you can watch the yields during the market day in real time using this U.S. Treasuries tab in the market screen in Webull. Also wanted to focus on global markets. Again, we talked about the China stimulus, saw a big pop in China markets this week. And I've shown this a long time ago in some of my pre-market analysis videos. But you can click on this global tab in the market screen in Webull, and you can see the Chinese stock markets, whether they're up or down for the day. And pre-market, this gives you an opportunity to take advantage of up or down in the Chinese markets, the Hong Kong China markets. You can also get more detail on the Hong Kong China markets by clicking on the Hong Kong China tab there, so you can see the advancers, decliners, cash inflow, also news, top gainers, etc. If you know more about those markets, again, the news. But again, if you want to try to take advantage of up or down in the Chinese markets, they tend to be volatile. We'll look at some of the ETFs. The ones we typically use to trade the Chinese markets are yen long, yang short. And I know a number of our BeachBum traders are very good at scalping, swinging those leveraged ETFs on the Chinese market profitably. They tend to be volatile, tend to see reversal days. So yen up one day, and then yang would be up the next day, slight retracement of yen. And then the next day, yang or yen continued its uptrend. So again, with the Chinese stimulus, it's been Chinese markets swinging back up. You hear more commentators talking about that, investment in China that is cheap, etc. I don't know if the crow's here. I think he might have mentioned Bob X, which is a leveraged ETF on Alibaba. I think he made significant money on that. So let's also look at the best performing industries for this week. Okay, so the best performing industries for the week, we see uranium, metals and mining, some software, real estate, semiconductors again rebounded, mostly on the Micron news, coal, again, energy, solar, education, paper products, some financials. So again, we don't see a whole lot of technology. So again, we're seeing rotation into other sectors other than just technology. We look at the most popular ETFs. So up on the Russell, up on small caps, down on the NASDAQ. Again, as we thought, we might get continued upside in the Russell. Yeah, rotation out of technology, still up on the Dow. Doesn't look like a strong direction in the S&P right now. Down on the NASDAQ, again, up on the VIX. So again, we're seeing slow increase in the VIX, up on the yen, and up on Russell small cap. And we'll look at some of the other currency futures, etc. Industries, looks like some lithium recovering, bouncing. Some healthcare, financials, and utilities have been strong. Energy rebounded, real estate rebounded. Again, technology mostly negative. Basic materials mostly positive. Consumer defenses very positive. So again, kind of a risk off on Friday. Commodities, again, natural gas. Again, China, Brazil, I think that's Brazil. Okay, let's also look at the futures real quickly. Just a quick reminder, you can also now trade futures in Webull. Get more information in the posting in our Discord, their previous offer for trading futures. So now you can also trade futures in Webull. So again, we see the Dow, looks like it tested that 43,000 level, making new all-time highs, getting plenty of strength from the Dow. Again, S&P relatively still strong, again, making new all-time highs. Looks like it's hitting some resistance, might be 5,800, high 5,700s. Not so much the NASDAQ, again, still positive, broke its August high, hasn't broke the July high. Looks like it might be downturning, caused some consolidation on that 20,000 level. But again, not nearly as strong as the others. Russell tested that 2,300 level. Didn't quite make the pre-August high yet. So again, we're seeing some inflows again into the Russell. Looks like it's swinging back up. So probably some further uptrend in the Russell. Nikkei just volatile, just pretty flat volatile. Euro stocks positive. The ECB is expected to cut again. German DAX been very positive. Easy Mike was just mentioning UVXY up like 11%. We see the VIX futures turning up slowly. And I wanted to also look at VIX futures term structure that we did a little bit more detail on last week. And just a quick reminder, you can find a link to that VIX term structure tool in the link section of our homepage, beachbumtrading.com, but without the U. And what we'll see is we see a slow flattening in this VIX futures term structure. It did pull up, so the near-term month, October, is pulled up significantly on Friday. Also, November is now in the 18s, and again, we saw this flatten out during the week. The near-term months are rising, and again, now we've got October is now above December. So again, we did see some further flattening, and then Friday, again, the near term did pull up some, so the backwardation did increase, but earlier in the week, it's definitely flattening out. We see the overall curve is moving up. So again, UVXY is a mixture of now September and October. I guess September's gone, so it's October, November. November is still below October, so that's a down drag on UVXY. But again, as the curve moves up, that's positive for UVXY and some of the other VIX volatility-based ETFs. So not as cheap as they were, but probably still relatively cheap for some downside protection. So I hope that helps. And we saw oil did break back down below 70, Probably going to have resistance at 70. We'll see if it retests this low 65 level. And we'll talk about how we're looking to play potential bottom bounce in oil again tomorrow. And natural gas has been strong. As much as must have been a futures rollover, that big gap up. But again, generally trending up. Probably retest that $3 level, might get some rejection there. It's like pretty good support at around 280. And gold's been a beast. Briefly broke 2,700 and retraced slightly. Probably get some consolidation along that resistance. And then we'll see if it continues upward or if we get some larger pullback. Same thing with silver. Briefly tested 33, got rejected, back down right around 32, so probably consolidate, support at 32. Copper up over 450, then rejected, probably consolidate, get some support in that area. Palladium trending back down. Platinum, slight correction. Corn slowly creeping up. Oats headed back up. Wheat tested, looks like it tested that 600. Tried to almost retest again, got rejected. Good support at 580. So we'll see if it bounces back up to retest 600 or breaks down into that maybe 580, 575, 570 level. Again, sugar's been very strong. Again, we've mentioned, and we can look at the ETF CANE, C-A-N-E. I did look, it's not, we don't have a short ETF for sugar, but that CANE ETF is shortable. So if you do want to directly short the CANE ETF, you could do that. Again, it made a very strong uptrend. So potentially some retracement opportunity there. So again, I hope that helps. Again, bond yields had been going up, which means prices had been coming down. We saw a slight correction on Friday, so bond yields retraced just a little bit. So we saw bond prices perk up a little bit. Dollars kind of just hovering right around the 100 level. So all the foreign currencies pretty much consolidating. Except for the yen had a pop up on Friday, so the Bank of Japan, one of the governors was commenting that they do need to do further restrictions, probably raise their interest rates again in the future, maybe further unraveling of that yen carry trade. So maybe that's the pop up in the yen. We'll see if that also creates some volatility. And you can see the other foreign currencies. Otherwise, the pound pretty strong, but consolidating, etc. I hope that all helps. Welcome, MD. Thank you for joining us. Hope you're doing well. Next, we will quickly look at some ETFs. Again, as we identify potential opportunities, trade ideas, trade strategies to long or short any index, commodity, topic, theme, etc. And we jump over to our ETFs Google sheet. We can find an ETF to long or short based on our trade idea. And you can gain 24/7 access to our ETFs Google sheet and do likewise by joining our Patreon. So if anyone in the chat has particular ETFs you want to look at, please post those and we'll take a look at those. I don't have any changes this week, so we can look at anything else that you'd like to. Let me grab a drink and we'll quickly look at some of the ETFs. Okay, I see a lot of mention of the China. We talked about the China ETFs. I see people mention KWeb, FXI, etc. Again, if we just very quickly look at the China ETFs, we have a variety of them. So our preferred leveraged ETFs on China is yin and yang, so yin long, yang short, got K-Web and C-Web, etc. So you can see their risk reward profiles and compare those to yin and yang. Also got a short on the FTSE China 50, YXI. So if you want to look at the charts of some of these, like K-Web, we'll do that in FinViz. Again, huge gaps up on that China stimulus, etc. They're talking about even more stimulus. So again, big gaps up in K-Web, which is unleveraged China. And if you compare that to yen, which is the long on China, so again, big gaps up. So again, longer term, plenty of room. It's been depressed for so long. And again, now you've got commentators, putting money into China just because of the value, cheap. You've got the stimulus. So you see that big pop up. Again, you can compare these various ETFs, their composition, etc. So compare that to K-Web. K-Web just can be non-leveraged. Alibaba, Tencent, etc. So you can pick the one that has the composition you like, has the risk rewards you like. And again, these do tend to retrace somewhat from day to day. So if we look at yen again, saw a little bit of retracement on Thursday and then bounce back up. The large cap ETF swaps and the short on China's yang. Or you can also use this YXI. Also, as with some of these emerging market ETFs, will also benefit from those. So you can see how much China exposure some of the emerging market ETFs. Also, we'll talk about that relative to some of the dividend stocks. Some of the global dividend stocks might have exposure to China, might benefit from that. Talked about oil and natural gas. So again, oil is the leverage long on natural gas, or UNL, UNG. The longs on natural gas. So again, you can pick the leverage, and the short is cold. So it has a lot of volatility. So if you're a short-term trader, nimble, daring, you can trade boil and cold. Was UNL, UNG. Oil, short on oil producers is strip, long is gush. Tomorrow we'll also talk about dividend payer USOI, also got long UCO, short SCO. Again, we have single stock ETFs, etc. So for NVIDIA, Tesla, Amazon, etc. Talked about the yen, long YCL, short YCS, also the Japanese market yen, FXY, talked about volatility. So UVXY is leveraged long. You can also use VXX, long, short, SVXY, SVX, or SMall, which is a dividend payer. If anyone else in the chat has a particular category, topic, etc., or ETF you want to look at, and throw those up. We'll try to keep an eye on. So the Crow's mentioning another, probably a leveraged long on Netflix and MicroStrategies. It looks like that's probably a short MSTZ, MSTU, probably a leveraged long on MicroStrategy. So these companies continue to come out with additional single stock leveraged ETFs, higher leverage, etc. And we'll continue to highlight those as we're able. If you don't find the one you're looking for in our main sheet, you can also do a find in our research sheet. And again, we continue to add new research on additional ETFs as they come out and mature. Okay. Let me grab a quick drink and let's go over our theme for this week, which is making money trading in October 2024. Okay, again, our theme for this week is making money trading in October of 2024. So let's see how October tends to perform relative to some of the other months. So we'll look at the newer chart. So again, this newer chart shows a variety of breakdowns for the past 5 years, 10 years, 20 years, and since 1950. So if we look at how October typically performs, it's generally positive. Over the past 5 years, it's been more positive than in the past. We see September had been significantly negative. September is typically the worst month of the year. Also, August tends to be not slightly positive, but this year, both August and September have bucked those historical trends. Been generally good, although we have seen pullbacks. And like the first week of August, first week of September, we got a pullback, and then a generally upward trend. So again, 2024 so far has bucked the historical trends. We'll see if there's a divergence from the historical trend in October, and October tends to be positive, and then leading even more positive in November. So again, October is generally a good month for trading, bounce back for October. However, as you'll see, October also tends to be when we get our market crashes. So they call it the October effect. And you can read more and hear more about what the October effect is, and also how October is typically the month for market crashes. So again, when we've had the biggest crashes, they've been in October, but typically people attribute that to the negativity of September bleeding over into early October, and then typically we get a rebound from those crashes later in October. So you shouldn't fear the October effect. But again, in my humble opinion, I would recommend having some forms of downside protection, some type of hedge if we do get maybe a early October correction and then a bounce back, or a more severe correction. Again, markets have been running at their all-time highs. Might see some significant profit taking. And we've also got the end of quarter right now, and then the start of a new quarter. So we might see profit taking, selling of the leaders, profit taking out of the leaders, rotation in the laggards, and then trending into the rest of the month. And also here, previous video, short video on how the markets perform in October, best performing sectors and industries. We talked about energy. Energy tends to be one of the positive sectors for October. Also retail, we start to get into Halloween, and then people looking forward into the Thanksgiving and Christmas holidays. So maybe some rotation into retail. We may have already seen part of that, but some of the companies that have pulled back, possible opportunity in retail going forward. If you think the consumer is going to continue to be strong through the end of the year, if you think the consumer is going to pull back and the retailer is going to have to discount a lot, again, we won't hear about a lot of that until after the fourth quarter. We've also got another set of Amazon Prime days in early October. I think it's like the 6th, 7th, or 7th, 8th or so. So again, possibly retail, definitely energy, starting to stockpile for the winter, etc. So you can again hear more about that in our short video on the best performing sectors and industries. We'll probably go into more detail on the fall, look at this again, talk about strategies for the fall in the next week or so. So again, October, end of September, October, beginning of the fall. So rotation into the fall stocks. And again, we talked about the end of the month and a quarter rotation. So again, laggards to leaders, profit taking out of the high flyers. So I hope that all helps. Let me grab a quick drink and check the chat. And if anyone in the chat has any other ETFs, topics you'd like to discuss, stocks you'd like to look at in the last couple minutes, we can do that. Otherwise, if you have any other questions, comments, topics you'd like to discuss, recommendations for improvement to our weekly trading game plans, any of our other videos, content, our tools, our ETF or other Google Sheets, our community, please put those in the comments to our video, or you can tag us in our Discord. And we'd love to have you join and actively participate in our Discord. And we're BeachBum Trading, all lowercase, no other characters or symbols, etc. in our Discord. So if you tag us in the Discord with any questions, recommendations for improvement, etc., we'd greatly appreciate it. And we would not DM you or send you friend requests, ask you for any money without first notifying you in our Discord. So anybody else is an imposter, please report and ignore them. So again, we'd love your feedback. And again, if you have any stocks you'd like us to look at, topics to discuss in future live streams or future videos, please let us know. Otherwise, tomorrow we'll be using all of this market analysis, trading strategies, trade ideas to select our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list. We'll also talk about dividend payers and how we can use dividend payers, and also several option strategies to generate income while we wait for our swing trading stocks to set up. So thank you again to everyone that participated in the chat, everyone that's watching after the fact, and we hope you'll come back tomorrow, 10 a.m. Eastern on Sunday for part 2 of our weekly trading game plan for this trading week. And again, we'll use all this market analysis, trading strategies, trade ideas to select our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list, and we'll talk about dividend payers and option strategies. So thank you again, and we look forward to seeing you again tomorrow. And have a great day.